Good afternoon and welcome to this joint webinar hosted by Bracewell and BDO. I am Chris Williams, Managing Partner of Bracewell's Dubai office. I'm delighted that so many of you can join us today. Today's topic relates to key updates and highlights relating to the economic substance regulations in the UAE. With this in mind, it is a pleasure to introduce you to my Bracewell colleagues, Shayan Najib and Ade Mosuro, who will take us through the initial sections of our presentation, and thereafter our good friends at BDO, Verona Hoh and Ashish Athavale, who will take us through the remainder of the slides. At the end of the presentation, we will run a Q&A session. As such, should you have any questions, please use the chat function or raise the hand option via the webinar options. And we'll very much look forward to taking those Q&As at the end of this session. In the meantime, we hope you find today's session to be of interest. And with that, over to you, Shayan.
Thanks, Chris. So in terms of what we're going to cover, we've split the presentation into 8 themes, as you can see on the slide. We'll take you through each of these, and then, as Chris mentioned, we'll have a Q&A session at the end where we can go through any substantive questions that you may have on anything that's been discussed. So moving to the first slide, the first thing that we're going to consider is how and why the economic substance regulations have come into force in the UAE. So there were 2 primary driving factors. Firstly, the UAE's commitment as a member of the OECD G20 Inclusive Framework on Base Erosion and Profit Sharing, what's more commonly known as BEPS. That framework essentially brings together over 135 countries to collaborate on the implementation of measures to mitigate against tax avoidance, improve coherence of international tax rules, and basically just ensure a more transparent tax environment. Secondly, in response to an assessment of the UAE's tax framework by the EU Code of Conduct Group on business taxation, which actually resulted in the UAE being included on the EU list of non-cooperative jurisdictions for tax purposes. So as a result of these 2 elements, in 2019, the UAE issued both Cabinet Resolution number 31 of 2019 and related guidance by way of Ministerial Decision number 215 of 2019 in an attempt to ensure that UAE entities that do undertake certain activities, and we'll look at these specific activities shortly, are not used to artificially attract profits that are not proportional to the economic activity that they are in fact undertaking in the UAE. As of last month, the 2019 regulations that I mentioned have actually been repealed and have subsequently been replaced by the Cabinet of Ministers Resolution number 57 of 2020, which is what we're focusing on and is what we mean when we refer to the ESR. And then the related Ministerial Decision number 100 of 2020, which is basically to provide guidance. So in terms of effectiveness, the new legislation applies retrospectively to financial years commencing from 1st January 2019 as a point of reference. So looking at what this would mean in practice, for a UAE company with a financial year running from 1st January 2019 to 31st December 2019, the first assessable period would be 1st January to 2019 to 31st December 2019 as well, so they will match up. For a UAE company with a financial year running from 1st April 2019 to 31st March 2020, the first assessable period would also be the same, so 1st April 2019 to 31st March 2020, and there wouldn't be a need for compliance for the period from 1st January 2019 to 31st March 2019. And then as a final example, if we had a UAE company which had a financial year running from 1st July 2018 to 30th June 2019, the first assessable period would be that entire period. So there wouldn't be a need to comply for the period from 1st July 2018 to 30th June 2019. So we're going to look at some of the key features and changes as against the 2019 regulations during the course of this session. So the question that we're going to consider first is, who does the ESR apply to? So as per the 2020 ESR, it applies to judicial persons, being a corporate legal entity with separate legal personality from its owners, and unincorporated partnerships that carry out what's denoted as a relevant activity, and Ade will be shedding a bit more light on what we mean by a relevant activity shortly. In the UAE, and that includes a free zone, So for the purposes of the regulations, the entities that are captured by the scope are what are deemed to be the licensees. Natural persons who did fall within the definition of the licensee in the 2019 regulations are no longer covered, so they do not need to file a notification or meet the economic substance test. In addition, a sole proprietorship or foundation would also not be captured by the scope of the ESR. One specific category that is important to consider perhaps is branches. So branches registered in the UAE are considered to be an extension of their parent or head office, and therefore they're not really considered to have a separate legal personality. That particular parent or head office that is registered in the UAE is the one that's required to file as a single licensee and will report the relevant activities in a consolidated notification. In contrast, a UAE branch of a foreign entity that's registered in the UAE that carries out a relevant activity is required to comply with the ESR as though it is a separate legal person. The exception to that is if the relevant income of the branch is subject to tax in the jurisdiction of the foreign parent or head office. For the avoidance of doubt, companies that don't conduct a relevant activity fall outside of the scope of the ESR. And in addition, activities listed on the commercial license of an entity are not in themselves sufficient in determining whether a licensee undertakes what is a relevant activity. So whilst it's possible that the commercial license may state the relevant activity, a substance over form approach must be used to determine whether a licensee actually does undertake a relevant activity and it falls within the scope of the ESR. So in practice, this will mean looking beyond what's stated on the commercial license to the actual activities undertaken by the licensee during a financial period. So if we move to the next slide, we'll have a look at who is exempt. So pursuant to the ESR, there are a number of entities that are exempt. Licensees who are tax resident outside the UAE, investment funds and their underlying SPVs and or investment entities, wholly owned businesses of UAE residents which are not part of a multinational group and only carry out business in the UAE. And it has been clarified that in this context, UAE residents means UAE citizens and individuals holding a valid UAE residence permit who reside in the UAE. A branch of a foreign company whose income is subject to tax in a foreign jurisdiction, which is in line with what we just said. And then any other licensees that may be directed by the Ministry of Finance. So that's sort of the general catch-all and slightly more open-ended limb. In contrast, previously the exemption scope was limited to any commercial company in which the government, either federal or emirate level, had at least 51% direct or indirect ownership. So moving to the next slide, but staying in the same theme of who is exempt, the question that arises is what obligations are there on an exempt licensee? So exempt entities are required to file a notification for each year of claiming the exempt status, and they also have to provide sufficient evidence substantiating its status as an exempted licensee for each financial year in which it's claiming to be an exempted licensee. A licensee that's claiming to be exempt on the basis of being a tax resident in a foreign jurisdiction is required to submit either a letter or certificate issued by the competent authority of the foreign jurisdiction in which that entity claims to be a tax resident, stating that the entity is considered to be a resident for corporate income tax purposes in that particular jurisdiction, or it can provide evidence of payment of corporate income tax in that foreign jurisdiction in which the entity is basically claiming to be a tax resident. And then in the event of failure to provide such sufficient evidence, the licensee will fall back to the general scope and will be subject to ESR compliance, where all the ESR tests would be required to be met, and we'll look at that a bit later in greater detail. So Ade is now going to take us through what it means to be a relevant activity under the ESR.
Thank you very much, Shayan. And just to recap what Shayan said, there are 9 relevant activities prescribed under the old ESR legislation, which remain unchanged. And in line with the old ESR, the new ESR requires entities both onshore and in free zones that undertake any of the relevant activities to maintain an economic presence in the UAE. As the slide depicts, the 9 relevant activities are banking business, insurance, investment fund management, shipping, lease finance, distribution and service center businesses, headquarter businesses, IP businesses and holding company businesses. These have all been given very specific definitions under the regulations, which we previously gone through in our previous webinar. But for today, we'd just like to focus on the changes introduced by the new ESR legislation. And as Shayan mentioned, it's a substance over form test. So the regulations look to what the businesses are actually doing as opposed to what is simply stated on the trade license. So there have been 3 main updates around relevant activities in terms of the definition of distribution business, service center business, and high-risk IP. The old definition of a distribution and service center business required the purchase of goods from a foreign connected person, and that was a defined term under the old regulations, importing goods into the UAE and subsequently reselling them outside of the UAE. This has now been amended to exclude the requirement to import and export the goods from the UAE. This means that businesses which are engaged in purchasing goods from a foreign connected person, again, like I said, this is a defined term in the old regulations, for the purpose of selling them within the UAE or sells goods offshore, should qualify as a distribution and service center business under the new ESR. The definition of a distribution and service center business has also been amended to exclude the requirement of the services to be in connection with a business outside of the UAE. Therefore, licensees providing any services to a foreign connected person will now qualify as a service center business. These changes would likely result in a significant amount of MNSCs in UAE having to reassess whether the relevant activity of a distribution and service center business would apply to them in their respective financial year. Also, pursuant to the new regulations, the definition of a high-risk IP licensee has been narrowed. The condition relating to a licensee not carrying out any research and development or branding, marketing and distribution as part of its core income generating activities in the UAE has been removed as part of the update. Therefore, IP related businesses should look to reassess whether they fall within the remit of the 3 limbs outlined in the new regulations. Verona will now take us through the rest of the slides. Thank you.
Thanks, Ade. So following on from the relevant activities, I'm just going to touch quite quickly on the test. By and large, the test remains unchanged. They have given further definition and examples on what they consider as a requirement for CGAS, the abbreviation for a core income generating activity, and directed and managed, as well as adequate employees' physical assets and expenditure in the UAE. So the test remains largely unchanged, but I just want to touch on CGAS because I do get a lot of questions from our clients. What's considered as a core income generating activity? Because a lot of people ask whether or not if a certain activity that falls under a distribution and service center, say for example, you provide support services to your related parties, but that's only a small part of your business. It's not you may not even be stated in your trade license. However, do note that these tests, when we talk about a core income generating activity, is a subset of a test after you consider whether or not you perform a relevant activity. So what it means as a core income generating activity is the activity that primarily generates income for the relevant activities identified. So even if it forms a small part of your business and you happen to do a relevant activity, you will still need to declare it and meet the test. What's been clarified as well within this, the legislation and guidance, is that core income generating activities can be outsourced. It was touched upon in the previous legislation, but it was made very clear in this one. So you don't necessarily need to have the core income generating activities with your company itself. You could outsource it to a third-party service provider, so long as you have adequate supervision and management of the activity. But it's important to ensure that it's not double counted. Directed and managed also remains mostly unchanged. Just one thing that was clarified within this legislation, that your directors or your board members doesn't necessarily need to hold a resident visa in UAE. What's important is that they are present physically in UAE when taking the strategic decisions. That means when they come in for the meetings, an adequate quorum needs to be present here. However, they don't necessarily need to hold a UAE resident visa. Adequate employees' physical assets and expenditure has not changed at all. It's the same test. Effectively, it still remains subjective. A threshold has still not been mandated. Say, for example, what's considered as adequate employees must you have? Is 2 enough or is 10 employees enough? It depends from business to business, and you will need to take a subjective approach to consider what's considered adequate for a business, because even businesses within the same industry may operate differently. So it's on the licensee and yourself as companies doing business in UAE to justify it to the authorities of why you deem it adequate. So this basically covers the reporting requirements. There are substantial changes here. I first cover ESR notification. I'm sure many of you will have submitted notifications by 30th June to all your relevant authorities. That's one of the most common deadlines. There are a few different ones, but I expect that most will have done it by 30th June. Now, annual notifications, there's a deadline stated to it. Before this, within the legislation, there was no deadline mandated. It was just something mandated by the authorities that came to you and said that, look, you have to submit it to us by 30th June for year ends 31st December 2019. But now it's become mandated that all annual notifications needs to be submitted within 6 months of the end of your financial year. So you have to consider your financial years to determine your deadline moving forward. For all those that have already submitted before this, you will need to resubmit this by December. So we are waiting on an electronic portal to be introduced, and it will be submitted on that common portal. I'm sure all of you have also submitted to your individual authorities. Moving forward, there will be one common portal where all relevant authorities will manage the notifications from. But another significant change that I also want to highlight is that before this, a lot of authorities asked whether or not you perform a relevant activity to submit a notification, which means if you did not perform a relevant activity, I'm sure many of you have submitted a new form to the authority stating that this doesn't apply to me. So for the resubmission, it will only be required for licensees performing a relevant activity for that financial year or are claiming an exemption. So the new exemptions that will apply that Shayan addressed earlier, if those apply to you, you will need to also file the notification and provide documents proving why the exemption will apply to you. ESR reporting, this means the final report that you send to the authorities on whether you meet the ESR test is largely unchanged. It's still expected to be filed within 12 months of the end of each relevant financial year. So the deadline is still 31st December 2020 for year ended 31st December 2019. You will need to still confirm whether you have satisfied the ESR test, and how this is filed is also expected to be on that very same portal that you filed the ESR notification. So what will happen is effectively you have to register on the portal and file both notification and reports at the required periods. I will now pass on to my partner Ashish, who will take you through the last slides.
Thank you, Verona. Good afternoon to everybody. So while you would have seen that there are substantial amount of changes on how ESR will be functioning in UAE, there is a lot that is going to change from the back end. Back end means how the UAE government is going to project manage or how they are going to monitor the ESR filings has undergone a substantial change. First of that being that the Federal Tax Authority, which is the authority dealing with VAT, has been appointed as a national assessing authority for ESR. Under the old regulations, it was only under the Ministry of Finance and then the regulatory authorities who had a direct line with the licensees. But with the new law, they have got the Federal Tax Authority, to the picture, and they will be doing certain reviews which are crucial to determine whether the ESR tests are met or not. So going forward, the overall project management from the government side will be the Ministry of Finance. Then there will be Federal Tax Authority. Then there will be regulatory authorities or the licensing authorities who have a direct line to the licensees. So with this change at the back end, what is going to change for the licensees? Not a substantial change for the licensees, I would say, but there is a clear-cut bifurcation of the responsibilities in terms of what will be reviewed by the regulatory authorities vis-a-vis what will be reviewed by the Federal Tax Authorities. So all the filing of the notification and the reports still lie with the regulatory authorities. They are going to determine whether a particular licensee is covered in the exemption status or no. So the first level of scrutiny still remains with the regional authority. If they believe that they are not getting covered, the line stops over there. But if they believe that they are getting covered, then it goes on to the Federal Tax Authority to determine whether the ESR test has been met. So if you look at the bifurcation of the responsibilities on the slide, on a going forward basis, you will mainly interact with your regulatory authorities, with your licensing authorities. However, at the same time, the Federal Tax Authority will play a substantial role in terms of how they will determine whether the ESR test is met. They will also have the powers to levy penalties called licensees for hearings. And what has been put as a last part within the ambit of the Federal Tax Authority is that if there are certain findings that are to be reported to foreign tax jurisdictions, they are supposed to report all this to the Ministry of Finance, and then Ministry of Finance through their channels will provide this data to the foreign regulators, which was one of the requirement under the OECD guidelines, or the purpose by which ESR had been placed into UAE. So broadly, these are the changes which are going to happen at the back end, and how the overall project management of the ESR thing will be done by the government. Moving on to the next slide, we have touched upon how there is a fixed penalty now. As per the old laws, the penalty for the failure to submit ESR notification was in the range of 10,000 to 50,000 dirhams, which is now fixed at 20,000 dirhams. Then moving on, failure to provide accurate or complete data or the report, ESR report. Earlier, the penalty was in the range of 10,000 to 50,000 for the first a failure, and for the subsequent failure, it was within 50,000 to 300,000, which is now fixed at a fixed penalty of 50,000 dirhams the first time if you do not, submit the report. And all these penalties become severe in the second time, which is in the range of 400,000 dirhams. And you also run the risk of your license being suspended or not renewed. So what we can see that once you are getting covered in the ESR net by filing of the notification and by filing of the report, after that, if you are into any major defaults, you could risk, somewhere close to 400,000 dirhams plus penalty and the risk of losing your license. So with this, we conclude our, presentation part of the webinar. We will leave the floor open for any Q&A or any specific points where the audience believes that you need a further clarification. All the panelists will be here to take up your questions.
Thanks, Ashish. We have some hands raised, so I will be unmuting the attendees, and then we can take the questions one by one. We have a question from Mr. Viren Bhatia. I would be unmuting him. Hi, Viren.
So I have a question on the branch office, which is actually a representative office of a foreign company. And this company is basically providing marketing, basically market the products of the parent company. Of course, they don't have any income because as a office, you are not allowed to have income collected here and no contracts to be concluded. So my question is, in such a scenario, what is whether the marketing service that is being provided by the rep office, is it considered distinct from the head office, or is it considered that the parent company itself is providing the marketing service, and whether that, I think there is some requirement to whether it is exempted or whether it is whether it has to be treated as an exempted entity for the purpose of ESR, or whether it needs to register for, or since it is not having any income, whether it is exempted either.
Hi, Viren, Verona here. I'll take your question. So, branch and head office, this legislation, they did make mention and clarify that they are not legally distinct. However, since your head office is a foreign company, you will need to determine whether the exemption will apply to your branch or not. That question will become to whether or not your head office, in whichever country, consolidates the branch financial statement for all its income and pays taxes in that jurisdiction. If they do, and you have the documents to prove it, then the exemption will apply to
you. But my question is that, okay, so that was one part which is okay, which you answered it. The other was like whether it is considered to, I mean, it is actually doing a relevant activity, because marketing of the parent company's projects here, whether that is considered as a relevant activity itself, because that is the first question. Also, also a question, and assuming it's a relevant activity, but because it is not generating any income over here, then whether it comes within the scope of the ESR.
Yeah, it's Chris. It's sorry, Verona.
No problem. Go ahead.
No, you raise a very good point here, because obviously there's a distinction between a representative office and a branch, as you've already noted in terms of one being obviously capable of generating income versus the other, which is not capable of generating income. And in fact, if it was generating any income, then it would obviously be in significant issues with the authorities. So I think that in this particular instance, then the actual entity itself, I should think, would not be subject to the ESR, irrespective of the activities as it's undertaking for the parent, because at the end of the day, those are not income generating activities. You know, I think that as with all of these answers, then some specific advice should always be taken in relation to any matter that obviously is asked during this Q&A session. But certainly there is obviously a distinction between a rep office and a branch, as you've already determined, and I think that therefore has an effect in terms of whether or not that would actually trigger a relevant activity being conducted, when actually you can't really have a relevant activity that's going to be generating any income because of the nature of your license.
Yeah, that's correct. Yeah. Okay. Excellent. Yeah. Thank you so much.
Thanks, Brian. We have another question in the questions bot where Mohammed is asking if JAFSA offshore companies do fall under ESR regulation. Hello.
Hi, I think because JAFSA is the free zone, if the other limbs are satisfied, the fact that it's in JAFSA in itself does not provide an exemption, because the regulations apply to all relevant activities that are within the UAE, including the free zones which would capture JAFSA.
Okay, thank you, Shayan. We have another question from Marwan. He has raised his hand, so I'll be unmuting him. Hi, Marwan.
Hi, good afternoon. Actually, I just have two questions. The first one is regarding the defined term for investment fund. Where would we get guidance as to what constitutes an investment fund? Because I think that's one of the new exemptions. And then my second question is regarding the ultimate beneficial owners of a licensee, and whether that information needs to be disclosed in regards to a holding company category, and if that is then shared with the tax jurisdiction of the UBOs.
Adi, Verona, could you take this question, please?
Sure. I'll first address the. Oh, sorry, Shayan, do you want to take it? Yeah.
No, I can address the first part of the question in relation to the investment funds.
Sure, go ahead.
So the investment fund definition is sort of clarified in the section of exempted licensees, which is 3.2 of the guidance resolution that was published in August. And essentially what it says is that an investment fund is an entity whose principal business is the issuing of investment interests to raise funds or pool investor funds, with the aim of enabling a holder of such an investment interest to benefit from the profits or gains from the entity's acquisition, holding, management or disposal of investments. And it also includes any entity through which an investment fund directly or indirectly invests. But it does include an entity or entities in which the fund invests. So basically the definition includes the investment fund itself and any entity through which the fund directly and indirectly invests, but not where the fund ultimately puts its resources to invest in, if that makes sense.
Okay, so it's a traditional definition. That's why I just wasn't clear. I need to look at the new regs. Thanks.
Sure, I'll take up the next question. I believe it was regarding the sharing of information across jurisdictions with regards to foreign UBOs. Did I get it right?
Yes, that's correct.
Yeah. Effectively, the sharing of information won't happen if you fail to meet the test, and also if you happen to be a high-risk IP business. So what will happen is that the federal tax authorities, which are now the assessing authority, will share the information of people who have failed to meet the test and are considered high-risk IP business with the FTA, with the MOF, and MOF will in kind share it with the relevant members of the OECD.
Okay, so basically, if you meet the test, then it's there is no further sharing information. I just wasn't clear as to, you know, if they're requesting this information, that they would share it irrespective. That's always a concern, as you can imagine.
Yeah, of course. Not as we have seen so far that is written within the implications within the law. But yeah, that may change in the future if they choose to amend it further, but not that we've seen inside this revised legislation.
Great, thank you so much.
No worries.
Thanks, Marwan. Shayan, would you like to take the next one? It's regarding e-commerce companies. Jayanta wants to understand whether they fall under ESR regulation. Hello. Shayan, are you there?
Yeah, I think in relation to e-commerce entities, the main point is still of the substance over form. So just because something is an e-commerce country, if it falls within the 9 limbs of what is a relevant activity and other sort of limbs are also meant that we've talked about, then the fact that it's e-commerce doesn't really exempt anyone. I think what's more important to look at is the function of that, what that e-commerce business is doing, and whether the nature of the activities ties in with certain of the other limbs. I think. Sorry, go ahead.
Sorry, Shayan. Hi, this is Ashish. I just wanted to add to that. So further to what Shayan said, you know, obviously the first test is going to be that whether you fall as a part of the relevant activities. But you know, what you need to make a note of that as per the VAT law, there are certain changes which, you know, force foreign e-commerce service providers to get a VAT registration in UAE, especially if they are supplying services to non-registered businesses or to people. So in that case, it will be worthwhile to see that just because you have a VAT registration, which is one of the requirements on the basis of which you file the ESR notification or test, whether that will be a mandatory requirement, and at the same time, we also you know need to see that you know once the notification is filed, assuming that on the VAT number you are getting covered in the definition, whether the FTA will, you know, try to look into the database of the VAT registered people and you know force those people to file a notification for ESR. So these are the things which we may have to look in the future. But just to answer your question in short, that if it is a company which is registered in UAE and meets the test, then yes, you need to notify and file.
Great. Thanks, Ashish. Hope that clarifies the question. The next question we have is from Mark. He wants to clarify the service center business requirements. So I'll unmute him so he can ask his question. Mark, you're self-muted. Please, can you unmute yourself?
Okay, is that better?
Yes, thank you.
Okay, thanks. Yeah, basically, I wanted to understand how the service center regulations as changed might apply to effectively a multinational consulting business. We have a UAE consulting business, but it works on the same basis as our other businesses. And we do operate quite frequently on a multinational basis where a team is formed of staff from potentially several countries, but led by one particular country. Now that seems to me that we have a UAE business providing consulting services to a group company, which I had thought would probably be require an ESR notification and filing, and I just wanted to see if that agrees with your interpretation or whether that has changed.
Verona, would you like to take this up?
Sure. Very similar predicament as like accounting firms, and I believe even Bracewell, who's a law firm. Yes, if you are part of the same group, where you are not part of a network per se, but you're under the same group structure with common owners and there's common control across the group, any intercompany billings, especially any revenue or income that you earn, whether or not you earn a profit or a markup on that recharge, would result in you doing a service center business. So even like time cost charged across, that will constitute as a services to a foreign connected person.
Okay, then I did file a notification that we would be needing an ESR, but that seems to agree. So thank you for that.
No worries.
The next question we have is from Amit. It's again related to a subsidiary of in Javza regarding a distribution and service center. Adi, would you like to take this up? I will unmute Amit.
Sure, thank you, Deepak.
Hello.
Hi, Amit. Could you brief the query you have?
Yeah. Thanks, everyone. So my just question is, we are a subsidiary based in Javza, means our parent company is in Turkey. So we have filed ESR notification under distribution and service category. So whatever dividend we are sending from here to Turkey is taxable in Turkey. So whether we are exempt from ESR notification, because one of the two questions in filing the ESR notification was whether income earned from relevant activity is subject to tax outside the UAE. So we filed as a partial, means it's partially taxable because dividend is taxable, but whatever retained earnings is not been taxed, means till now is not taxed. So my just question is whether we are exempt. If we are exempt, then whether we need to file again the ESR notification for previous year, or means again in previous year also.
Thank you, Ahmed.
Yeah.
Shayan, you dealt with the exemptions. Would you be okay to take this question?
Sure. I think on the second half of the question in relation to exemption, I think as Verona mentioned in her slides, even if something has already been submitted, that we still need to comply with sort of the resubmission part of it. So that would be if we've submitted it by 30th June 2020. By 30th June 2020, a resubmission would have had to be occurred on the basis that it would have to be within the notification of 6 months from the end of the financial year. Verona, I think that's in line with what you mentioned on slide 10.
Yeah, just to add on, regarding this question on the dividend being taxed in your parent company, right?
Yeah.
Dividends, well, the taxation of dividends being remitted shouldn't be considered as tax outside. What they mean by the profit it being taxed outside UAE is effectively you have created a permanent establishment in another country, and therefore you're paying tax there.
Yes. So whether we are exempt?
No, you're unlikely to be exempt if the only tax that you are paying outside UAE is on the remittance of dividend through your
Yeah, because
parent
we are
company.
100% subsidiary of a Turkey-based company.
Yeah. Only if you have any income that you earn from your UAE company that is being subject to corporate tax overseas, then you can qualify for your exemption.
With sufficient evidence.
Yeah, of course, you need to prove that you have, you need to get the tax returns from those authorities.
Okay, ma'am, whether we need to file again the ESR means notification for previous year 19?
Everyone will need to refile the notification if you happen to do a relevant activity or are applying for exemptions.
Oh. While filing, ma'am, just one last question. Means there is a second question. Question number 2 is there, whether the income is earned relevant from activities is tax outside the UAE. What we need to means there are 3 options: yes, no, or partially. So what option should we choose in that?
So you need to, okay, so say for example, I believe you said you're a distribution and service center business.
Yeah,
you need to
we are trading.
You need to identify the income that is attributed to that relevant activity and consider whether that income that is attributed, whether it's taxed in any other jurisdiction outside UAE.
Yeah, okay.
So if it's taxed, whether it's wholly, partially, and all that, you need to prove that. So you have to prove that in the form of tax returns and submissions to the authorities.
Okay. Fine.
Verona, sorry, I want to add, something over here. So just to give an answer to your question, Amit, okay, what you are looking at 2 different things. One is the dividend which you are paying to Turkey, which is getting subject to corporate tax at Turkey,
20%.
which is a totally separate thing. But given that you are a subsidiary, okay, you need to look at what you are earning in UAE, and that is the part where you are getting covered in the relevant activities, which means you get covered as a part of ESR in UAE. So just because you are paying a dividend and the dividend is liable to a corporate tax at the Turkey level, that doesn't determine for your subsidiary in UAE, and it has no linking to the what we are studying right now from a UAE ESR perspective.
Okay, so means actually whole income is being distributed there only, but if they are telling that it's tax outside UAE, then actually it's whole income is taxable outside UAE. So whether we are coming in exemption, still doubtful. I don't know.
See, because you are giving what you are giving is a dividend. So if assuming that there would have been a corporate tax at the UAE level, the dividend would have been a tax paid money which you are going to remit to Turkey in an ideal case, subject to the dividend distribution tax, if any. But you need to look at what you are doing at the UAE level, and especially you are a subsidiary. If you are a separate company than Turkey at the UAE level, and you are getting covered in the relevant activities, which means that you get covered in ESR.
Okay, Adi, thank you.
Welcome.
Yeah.
Thank you.
If I may just quickly jump in, just with a quick general remark on all of this. I think the importance of all of this is really clarifying exactly what the business is doing and ensuring whether or not you fall within the relevant activity, and without it sounding too self-serving in these particular circumstances for a group of lawyers and a bunch of accountants to be saying this, then this is when obviously your professional advisors do come in very handy, because this is stuff that obviously we're advising our clients on a regular basis. And I'd certainly recommend that if there's any difficulty in terms of interpretation of the regulations, then you do reach out to either your lawyers or your accountants.
Thank you. I think so that's key given the different types of businesses we have in UAE. The next question is regarding high risk IP from Ahmed. I will be unmuting him. Adi, would you like to take this up?
Sure.
Hi, Ahmed. Hi, Ahmed. Can you hear us? Hello, Ahmed. Ahmed, can you hear us?
Can you hear me?
Yes.
Yeah, we're a software company. We're developing the IP as partners who all reside outside the UAE. So the IP generation is not really taking place in the UAE, but we're outsourcing, say, pre-sales, post-sales, project management to a resident company in the UAE. So with that kind of formula and the new changes that have taken place, are we supposed to notify or what? Thanks.
As Chris mentioned, I think the first response is you would need to speak to your professional advisor to be able to give you a definitive response. But in terms of what has changed between the old regulations and the new regulations, is previously there was a condition relating to the licensee not carrying out any research and development or branding and distribution as part of its core income generating activity. That condition has actually been removed. So the definition is a lot more narrow than it was. So the question is whether, as part of your core income generating activity, you are getting an income from the ownership of IP. Based on what you said to me, it doesn't seem to be the case, but you would need to confirm that with your advisors.
So can you come again? The last statement, it doesn't seem to be the case. Yeah, can you repeat that, please?
Based on the facts that you set out earlier, it doesn't seem to be the case that you would fall under the category of high risk IP. However, like I said, you would need to confirm that with your professional advisors.
Sure. Thanks. Great. Thanks.
If I could just add on to that. So I believe that you mentioned in the fact pattern that it's outsourced to a company out within UAE, right?
Some of the functions when it comes to the sales process, so pre-sales, post-sales, project management, but the IP generation itself happens by partners who reside outside the UAE.
Okay, yeah, then I agree with Ade. The reason why I asked that question is that if it's developed by someone in UAE, you could potentially get out of the high-risk IP definition.
Okay.
Thanks, Ade and Verona. The next question we again have is related to service center business. It's from Siva. I will unmute him so he can ask his question. Siva, you are self-muted. Please, can you unmute yourself? Hello, Siva, can you hear us?
Good afternoon, all.
Good afternoon, Shiva.
Yeah, I'm calling from Elliott Turbo Machinery Limited. We are into oil and gas service and maintenance services. Actually, we are a branch office of a foreign company, and some of our managers provide support to the related parties in foreign companies. For that, we are making management recharges to the related parties at cost basis. Is this falls under the scope as per the amendment, or will it not be under the scope?
Thank you, Shiva. Sorry, Verona, go ahead.
Yeah. So from what you're telling me that you're providing services to a related party overseas, it doesn't matter if you cross-charge at cost or at a loss or at a markup. Effectively, you are earning income from that service, and therefore you should fall under the service center business.
Okay. But being a foreign branch office, our numbers are included in our head office, and they pay tax there. So, what about the amendment?
Are you charging it to your head office, or are you charging it to your related party?
Means our related companies, group companies. We are having different countries.
Okay. So you definitely do a relevant activity. Whether or not the exemption will apply, the question is whether the income that you earn in UAE, is it consolidated and taxed in Bahrain?
Yes,
Ashish can
correct.
probably pop in and see whether or not, how does Bahrain corporate tax works, as he works in that jurisdiction as well. But you need to consider whether the UAE income is consolidated and taxed in Bahrain. If it is, then you can avail the exemption.
Okay. Thank you.
Sure, Verona. Yeah. So if you are, showing this as a part of the revenue at the Bahrain level, and Bahrain also has the concept of
not
ESR.
Bahrain, I'm sorry, it's not Bahrain, it's a UK. We are a UK branch office of UK company.
Okay, understand. So,
and our numbers are consolidated in UK books, and UK pays tax there, which includes Abu Dhabi numbers also.
Understood. So, Siva, the logic remains the same. If you are subjecting it to a corporate tax in the respective jurisdiction, ideally you may not want to fall in the purview of ESR as per the new law, but obviously this needs to be looked at in light of specific facts, that why is it that your branch is cross-charging and not the head office.
Means I can't get your point.
Yeah, so I was saying that if your revenues are subjected to corporate tax at the UK level, okay, then you may fall out of the definition of ESR in UAE. But this needs to be looked at in light of a specific fact. So what I said in the last part was that it is worthwhile to evaluate that why your branch is cross-charging, whereas your head office should have cross-charged. So this needs to be determined on the basis of specific facts.
See, basically, for an example, one of our manager, he supports Bahrain also. Sitting here, he sits here and supports Bahrain. So for supporting that, we are charging his cost, cross-charging to Bahrain at cost basis. This is an example, actually.
Understood. So Siva, we will reach out to you offline, and maybe we can speak to you on one-on-one basis for your query.
No problem. Yep.
Thank you.
Thank you very much.
Well, thank you everyone for the questions, and thank you for attending the webinar. Chris, would you like to say a few words?
Yes, well, firstly, thank you very much for everybody's attendance, and also thanks so much for all of your questions. As I noted, then obviously this is quite a complicated area of regulation with a lot of moving parts, and obviously should you wish to at any point in time, then do feel free to reach out to anybody who's been participating today, and we'd be only happy to obviously assist with any specific questions that you might have. In the meantime, then thanks again, and thank you for all of our presenters for their time and for their thoughts, and we very much look forward to joining with you again on a webinar in the future. So have a good afternoon, and thanks so much for attending. Bye-bye.